Good morning, everybody. Let's get some charts up here. Well, tomorrow was the TJ call it go to the beach day, and it was. It was just a grind all day long. So what's in store for today? Well, right now it looks like more the whipsaw. Not things aren't going very far, but they were up. The report came out, inflation report, prices whipped up over the little congestion area and get whipped right back down again. And so we've got a little bit of a void below, and we'll see if it can get moving. Things can start moving down toward that level, whether it's going to get stuck here. See, they're 433.5, right about where they were at yesterday's close. SPX. Well, McGrath, I'm sure you saw they held 43.50, defended it all day long. And then that little blip at the end of the day, and it just popped right back up like, trying to push the balloon underwater and, close right back up there. So on that little move this morning, it moved under it, and now it's right back there again. So I would think it's going to stay around here. Yeah, I see that, big open interest at 43.50, which expires tomorrow. So potentially tomorrow could be the day the markets move as those options expire. Of course, they could just get pinned there. That would be terrible, but hopefully it starts to move in one direction. And so sellers have been rejecting every move that it attempts to go up. It goes up like it's going to keep going, and it gets knocked right back down. And then buyers step up, again all day at the same level and holds it there. And so it's just been that jiggle back and forth. So we've got yesterday's trading now as a reference point of overhead resistance, which if it got above it, it's got a void. And, so it's getting tighter. We got lines in the sand that are relatively close, and we've got voids on both sides of them. So if this market could get out of this range, and, here pre-market, it has broken down, as you can see here, and coming back up where sellers should want to sell it short as it's rolled over. And if that can pick up some steam, and I'm just, you have to have your thoughts as to what information we have. And I think if it can't get above 43.50, after jiggling around for 20, 30 minutes, maybe less, buyers may throw in the towel, and we see some movement to the downside. So as far as SPX goes, premiums increased a little bit pre-market on that dip down, and I think 42.70 is what I would call the no-brainer trade today. Last I looked, it was 50 cents by 60 cents. Go down there. And if it could fall that far, yeah, they're going to be worth a whole heck of a lot more. So see what they do in the first few minutes. But even if they went all the way down there, and it took out that low, it was based on how we analyze the charts. At that point, buyers should show right back up again, because that would be a tremendous move. It would be a greater than 100% retracement. I think it would just pop back up again, and things would be okay. So things have been whippy. If you're thinking to do 2 contracts, do 1, save some powder for the other. If you were going to do 6, do 3, and so on. Things are kind of whippy, but I think down there is a no-brainer. And the way they're juicing these premiums to the downside, I mean, they think it's going to go down. And so if you're a little more adventurous, and I think it's still okay to go 42.80, which was last I looked, 80 cents by 95 cents. I mean, that's a long way down. So, you have choices, more money, more risk. That's the way it goes. On the upside, bring down. I had 42.15, but then the markets went down. So, 42.05, which would be a big move to recover and get all the way back up there. Last I looked, it was 55 cents by 60 cents. 4,200 for Friday. I think no brainer, McGraw. I mean, if it went down to 4,200 by Friday, man, I think the correction would be over. So, yeah, a big whole number, so far away. If I think even in, the concept of measured moves, it would put it somewhere down there. You've got this pivot low and this red bar ignored on the weekly charts, and you've got this pivot in the way right there. So, absolutely. And if you're going to do it now, well, yeah, whatever. So maybe leg into it, but look, even if this week goes out with this bar being a red bar that closes near the low of the week, right, that opens up the door to what I would see as the potential for a measured move if we broke below this 4,300 early next week. And so putting it at 4,200, it may be a little bit lower. So that pivot down there, and then looking at subjective reference points, you got the 200 down at 41.60. So we've got pivots down in that same area. So I don't think it'll go down there by Friday, but we'll get more information, by the end of the day tomorrow for sure. So, that's going to be a big area down there for institutions. I mean, the 200, those pivot lows, it would be, as far as a correction, if it actually went down into that area where the 200 is below 41, let's call it 41.75. And then those pivots, that would be about a 7.5% correction to get down there. So, and then, we'll see what the internals look like, because they're still not giving us any edge here, pretty much neutral, as the markets have gone nowhere. So let's look what other things are moving. Look at the Qs all the time because we look at the futures, but, they got whipped back and forth. They're coming back up into where they broke down from. So should be sellers up there. We'll see if this can roll back over again. We've been talking about this potential, basically an SPX of a head and shoulders type of a bottom, if it could make a turn. No evidence of that yet. We see the similar price action of just sideways chop all day long yesterday. It's pretty boring, but is what it is. And hopefully, it goes lower. You got support down here, 2 pivots. This has already been tested once and hit resistance, and markets are just waiting. Tomorrow, the options expiration, the monthly options expiration, the middle of the month sometimes is a turning point, which we'll be right into. By Friday is the 15th, I believe. Yeah, it's the 15th. We got these financials reporting earnings, which JP Morgan, last I looked, wasn't doing much of anything. Some bearish charts there, which were looking bullish. So markets are digesting this information, the border wall crisis, the supply crisis, the president crisis, all these crises, and, you have a mask on or you're mandated. It's a crazy world. It'll pass. All right. NASDAQ futures holding on to some gain here, popping back up, but into where sellers are going to show up. Looking at this, Is this possibly bottoming here? Maybe. Lots of pivot lows down here. So they've been defending this area. And so down below there, you know, should get some pretty decent movement to the downside. So far, just in the middle of nowhere. Just a perfect example of just stay away. You know, moving averages, spaghetti screen intertwined between the daily ranges. You know, why bother? Yeah, Steve, you know, so Steve's saying on his whiteboard, crisis equals opportunity. Yes, but just like having a contrarian point of view, you know, all these general, um, you know, things that we might say or think or from history that crisis creates an opportunity, blood in the streets, so on and so forth. All of that, yeah, but when do you pull the trigger? You could be early and dead, you know? So we need to align our technicals with that view. So as this time of year with the September, October correction, which has been playing out, should this, you know, ideally follow through into the middle, maybe third week of the month or whatever, wherever it's going to be. And then we look at our internals, we look at our patterns, things like breakdown failures, wide range bars, bottoming tails, whatever it is, right? It'll be saying this is a pattern that's aligned with other concepts to create a strategy that directs us to buy, right? Buy what? Well, we'll have to figure that out. Buy how much? Well, we'll look at the patterns and we'll say, hey, let's leg in to this particular market. Could be Qs, could be spiders, could be whatever. And we'll figure it all out as time goes on. Dow's been showing a little relative strength, trading range. You know, it led the way down, but then it popped back up and it went back down and it popped back up, you know, but it got all the way back up to the highs here where others didn't. And so that's just been whipping back and forth. The same jiggle there on the news where it took out the highs, got knocked back down. Another piece of information that says sellers are just lurking up above, waiting for what they believe is an opportunity to unload. Buyers just haven't thrown in the towel yet. Maybe it's tomorrow. Bitcoin up into that big resistance area there and backing off. Beginnings of a little breakout failure type of a pattern. I think yesterday I mentioned what if this is an inside day to create a breakout bar failure, which is simply a consolidation of 2 or 3 days. You get a breakout, it's got a minor tail on the top and then an inside day. So it didn't get the inside day. It really got more of a, not quite an outside day, but it broke the lows. So it's just hanging up there. So breaking below yesterday's low, it probably starts to pull back, would make sense. It had a really nice run up into, you know, what's to the left there, and needs a little bit of a rest. Crude oil, still holding up there, got backed off, trying to get a topping tail on the weekly chart there. It's had a heck of a run, so little consolidation going on, still bullish. Gold just continues to be messy, and you know, this is the kind of market we're dealing with. You know, had that pop up, slam back down. You know, this isn't a market for those that do not have. It's not a market to try and get lucky. Let's put it that way. There are just, you know, trending bull or bear markets, and you can get lucky. You ain't going to get lucky here. And even if you know what you're doing, you better be quick. Silver shaping up and got whipped back and forth, but you know, looking at the daily chart, you know, we've got that downside shakeout and the topping tail that so far has been ignored. So it's in development mode, I'd call it. bonds pop up here a little bit. Look, everybody talking interest rates. Look at the 10-year, backed off a little bit here. So really nothing of significance today to really go on. We'll just see what happens here day to day. Transports continue to improve, and that's a good thing. And what's good about it, even if we get this downside move in the markets, the fact that the transports have held this low and have gotten this deep into this congestion, it just leaves room. And I'm assuming that the markets do follow through to the downside, the October seasonality thing and so on. It leaves plenty of room for this to come in and not damage what is an improving weekly chart over here. So it's another thing we'll just be watching to see how that plays out. So last time, look at the, there's the 5-year interest rates just going up. So this inflation thing obviously is real. We see the price of oil. We see the price of foods. People are starting to empty the stores. You see this stuff on TV, empty shelves happening wherever. So things are getting crazy, and we'll try and take advantage. We just need to of what's happening in the markets. We just need things to start moving, and so day to day, eventually it'll start to happen. All yours, Dan.
Now, when you say empty shelves, are you talking about because of supply shortages, or have you been reading about this friggin' shoplifting?
Yeah. So they're showing people that are, I guess panicking because of news and just stocking up on whatever. So
No, right. And we've been talking about that. And I said Costco's the one who started it when they, they're marking people, oh, we're new limits on toilet paper and towels and cleaning supplies. Well,
yeah.
guess what? That's
right. And look, you see the same news I see and everybody sees, and you see all of these tankers sitting out there. And now someone on TV is saying, hey, call out the National Guard, get the army to unload them, which is a reasonable thing to do if you really can't get people to work, which, I don't know, it's crazy. So,
but also, did you hear about the horrible news in California? These just shoplifters are emptying the drugstores, and they're having to shut down because they're stealing everything. So talk, you mentioned their tankers and labor shortage. Barry Sternlicht had a really good interview today on CNBC. I highly recommend you finding it and watching it. He's a very smart man, in my opinion, successful businessman, and he's there on the ground floor. He says he has 120,000 apartments, he has hotels, he has restaurants. I mean, he's the real deal, and he invests, and he just covered so many amazing subjects. But he was saying, yeah, the labor thing is real. The hotels, the restaurants can't hire people. Greg, you remember yesterday we were talking about the expensive hotels down in Key West and elsewhere, and that was one of his comments too. He said we can price our hotels at whatever we want, and they're selling out. So I don't know what's causing that, but look at them friggin' Hilton Hotel here, all-time highs. If you've asked me that in the pandemic low, when there's no business travel, if you would have told me, hey Dan, October 2021, we're going to be at all-time highs, I'm like, yeah, good one, yeah, right. So anyway, he was talking about Bitcoin and the memes, and he says, hey, when we were growing up, you got fundamental analysis, and he says there's a whole group of people today don't give a hoot about that. It's just based on speculation and these memes. And he mentioned there were 2 new meme Bitcoin stocks out. Greg, one of them he called FOMO Baby, FOMO Baby, FOMO, fear of missing out. He said it's already worth $200 million and it's a joke. So you know how we talk about people, all right, you got some stocks here. All right, we got a lot of questions here. Jose, IOVA. Yeah, I love, what's today, Wednesday? I love Monday's bar. You know, we were talking about people not wanting to work for minimum wage. There you have it. Whoever came up with FOMO baby, 200 million sitting in his apartment. This one is top of the range. I don't know, but I like the monthly buy setup and reversal. And that's obviously the travel industry. So let's definitely watch that. APLS. Maybe a bounce, but it's you know, you're playing in the dumpster on that one. We did PAGS yesterday, bull put, and it's gapping up, looks great. Nicola's on my list for bottoming pattern here. The sector was ripping. Uranium was ripping yesterday. I'm mad we didn't get on this in the morning. I was waiting for the close, and that's what happens sometimes. Adobe's still on my list here for put spread over last week's high. Pan W breakout all-time high relative strength. I like that. And Diego Halliburton short. Yeah, not a big target, but yeah, you got two topping tails far from the 20. RLX 509. Yeah, I have it in here somewhere. Maybe 30-minute high. Let's see what it does. Yeah, any we bought 2 days ago and we stopped out yesterday on the gap down. But Thane was telling me that this is really kind of getting into the Bitcoin space. So yes, I am interested in getting back in this. I have it in a window, so let's keep an eye on it. All right, whatever, it doesn't matter. Doesn't matter. Thomas AMD, yep, that's on my list. Yep, AMD over last week's high, I like a lot, yep. Yes, sir. You've got flat MAs, you got breakdown failures, it's going sideways at the top of the range, yep. Mercy, yeah, and I see that's a better bottoming pattern than one I looked at a few minutes ago that was just in a coma. This is nice because you had this gap reversal, deep retracement, sideways, red bars ignored, 20 MA, flattening and curling, closing with a bullish engulfing. So I'm going to put that in a window. Looks great. Mercy, mercy. Yeah, Nikola Thomas, we talked about, yeah, yesterday. Yeah. Yeah, we saw it ripping in the morning yesterday, and then I didn't keep an eye on it. But wow, Q's here taking out pre-market high now. Wow. Now I posted pre-market. See the gap here? My data starts at 8 a.m. Based on this gap to the top of this 15-minute pivots, I posted Qs and IWM. Same with IWM. IWM now has 0 DTE trades, and today is Wednesday, 0 DTE day. For spiders, Qs, and now IWM. IWM is not taking out the pre-market high. So as of right now, 927. Let's play it by ear. 5, 10, 15, 30-minute high. I don't know. I'll tell you when I see it. But I like this for a 0 DTE put spread. The 356s look great. Domino Pizza, I saw some headline in the journal about it, and I said, oh, look, bottoming here. At major support. Let's keep an eye on that. Hubs. We big old wide range igniting yesterday. I missed that. Look at the volume. Maybe 30-minute high put spread there. GRWG, a gap breakdown. That's hey, today MT Live, we're talking about trends. This is a nasty downtrend with parallel 2050 MAs, but gapping down. Plug, we still have a half lot of a put spread, and this thing now gapping up. I said bid 2 cents to close the back half, and we should get it on the gap up this morning. Uranium I mentioned yesterday, and that sector was moving. Sting, little shipper company. It looks like it's been dead here, but nice gap today. Maybe some of these Reddit boy toys are coming up. So BlackBerry has a little gap here. Let's keep an eye on that. Look at COS yesterday. This is a Reddit toy. And I mean, this, unless it was news, this totally looks orchestrated to me. It's like they said, you all ready? You got your buy button ready to go? Go. And look at that rip into the close. Nothing to do with it now, but that's, let's keep an eye on some of the fangs. So BlackBerry is one, right? BBBY, but that poor thing is ugly. AMC, nothing. GME, nothing. I think people are more focused actually right now on these Bitcoin stocks than those typical things. Wayfair here got a downgrade. That's ugly. Now Cream, we have a put spread. Looks great. Tags, I tighten the stop. Pre-market, I tighten the stop. Let me give it to you all. Vox, no pattern. SGH, big old gap at the resistance. Vimeo, it had something to do with earnings or whatever, but it's in a downtrend, gap in a resistance, no interest. SAP said something or other about earnings guidance. Wow, that's an ADR. That's a big gap, no interest. Apple said they're going to make 10 million fewer iPhones. That stock's been under pressure. And suppliers, they mentioned suppliers, Avgo, and they mentioned Texan. Texan is a bear 1, 2, 3 if it closes here. Block had earnings. McGraw, let's keep an eye on this for a put spread under yesterday's low. Block. I think he traditionally is spready, but I'll put him there. Look at this Adobe I've been watching. Shoot, it's going.
Moderna making the turn on the hourly. Looks good.
Myrna, my alarm didn't go off yet. What's wrong with my alarms? Yeah, I like it better now than yesterday. 293.